Cryptocurrency Terra Luna crashed over 85% on Wednesday, data from CoinMarketCap shows, with the cryptocurrency trading at $6.18. Terra, or USD, a digital token with a $16 billion market capitalization that is designed to maintain a one-to-one peg with the dollar, known as a stablecoin, nosedived over the past 24 hours. Its price fell below 65 cents before somewhat recovering to 93 cents. In other words, USD failed spectacularly at the one thing it was supposed to do to maintain parity with the dollar. The episode is reminiscent of when the Reserve Primary Fund, a money market mutual fund with $68 billion in assets, fell from $1 per share net asset value to 97 cents during the financial crisis after Lehman Brothers filed for bankruptcy in 2008. It owned Lehman commercial paper, and the investment bank's collapse caused panic among money market fund holders who rushed to redeem shares. Money market funds were thought to be as safe as FDIC-insured savings accounts. There are different types of stablecoins, each carrying its risks. For example, Tether and USD Coin are fiat-backed stablecoins, which means they should have $1 in reserve to support each token they issue. But there's not always a lot of transparency surrounding those reserves. USD is an algorithmic stablecoin, which means computer codes work in the background to maintain its price. Essentially, smart contracts burn or mint UST or Luna, Terra's native token, to increase or decrease the value of USD. As we wrote a few weeks ago, the risk is this system may not hold up against extreme price volatility, causing Terra's stablecoins to depeg. Luna soared earlier this year because of the high demand for UST on its Anchor protocol. Anchor promised APYs of almost 20% on UST deposits, which is all very well when times are good. Unfortunately, as we saw this weekend, the system may not be sustainable during times of extreme turbulence and panic. The Luna Foundation Guard, a nonprofit dedicated to supporting the Terra ecosystem, has been buying Bitcoin in recent months as part of a fund that's designed to prop up Terra's stablecoins. It's working toward a reserve fund of $10 billion to prevent any depegging incidents. This is good in theory, but it did not work in practice. In terms of Terra, the drop happened to fall on the same day that the Federal Reserve issued its biannual Financial Stability Report, in which stablecoins featured prominently. The report noted how stablecoins could be subject to runs on money market funds, especially during times of stress when the assets backing these tokens can become illiquid. USD is an algorithmic stablecoin, which means that it operates differently from most similar assets. So what exactly happened with USD? First, it is important to note what makes the asset unique or dangerous within the world of stablecoins. More popular stablecoins, such as Tether and USD Coin, are backed by assets such as fiat dollars in a bank account, treasuries, or short-term commercial debt. This approach is also dangerous, since issuers have at times been opaque about the exact breakdown of their reserves. USDT has been especially controversial, and watchers are concerned that these assets may not have enough liquid collateral to redeem the $100+ billion in assets that they support. That said, those appear to be a paragon of stability when compared to USD. Instead of being backed one-to-one by tangible assets at a bank or custodian, UST uses a complicated setup with another token, Luna, to try and maintain its peg. Luna is a native token of the Luna blockchain, a decentralized platform like Ethereum that can run various types of applications like decentralized finance programs, trading and lending, and support NFTs. Every USD is supposed to be redeemable for $1 worth of Luna, currently priced at $30. Of course, prices fluctuate just like in the fiat world. The exchange rate for a dollar against other currencies adjusts daily. In UST's world, Luna is supposed to be a stabilizing mechanism to help return the price of a UST back to $1 when it deviates. If UST falls below $1, there would be an arbitrage opportunity to buy a UST for 98 cents and then trade it for $1 worth of Luna. Eventually, this trade should bring the price back into sync. The system seems elegant on paper and has clever financial engineering, but it is unproven. There have been multiple unsuccessful attempts in the past to create an algorithmic stablecoin. For instance, about a year ago, a token backing up the stablecoin Iron, called Titan, dropped to zero amidst market uncertainty in what the team called the world's first large-scale crypto bank run. It looks like Luna tried to learn from these failures and was concerned that some purchasers may worry about Luna's underlying value, so it also bought over $3 billion worth of Bitcoin and Avalanche as a further stabilizing mechanism for the protocol. Last weekend, UST started to deviate from $1 as macro uncertainty continued to mount in the light of the 50 BPS rate increase on Wednesday, concern about April's inflation numbers released tomorrow, and the double-digit dips impact most crypto tokens in recent days. There were some allegations that an unknown actor was trying to flood the market with UST to attack the protocol, and one pseudonymous actor even took out a very public $10 million short position against the asset. As all of this was happening, over $5 billion worth of UST was being drained out of the Anchor protocol, a DeFi lending application that runs on Luna. This represents about a third of the entire market capitalization, which could be seen as a no-confidence vote on the asset. This was bound to happen at some point anyway. Participants in this protocol received an unsustainable 20% yield on their hold, which is abnormally high, even for crypto. Eventually, this was going to unwind. So what does this mean for investors? Decentralized finance promises to take the middleman out of traditional financial services, offering high rates of return on deposits, reducing fees, and making banking services more accessible. However, as recent events demonstrate, it is a work in progress. Some aspects of DeFi overturn banking models that have taken decades to develop, including the consumer protections that many Americans take for granted. Those with UST on Anchor's platform may be able to earn high rates of interest for a short time, but there's a risk. If UST collapses, as other algorithmic stablecoins have, those investors would lose it. Terra's reserve fund failed to hold up the value of its stablecoin, but some also say Luna Foundation's rush to sell Bitcoin flooded a failing market, with even more BTC, and could have caused prices to drop even further. Both Luna and UST are in the top 20 cryptos by market cap, and if they fail, it will add additional pressure to the broader crypto market at what is already a worrying time. This ball of yarn started to unwind over the weekend, and even when the Luna team deployed all of the Bitcoin at its fingertips, as well as hundreds of millions of dollars in UST to market makers to bootstrap liquidity and brings things back to an equilibrium, it has not recovered. It may never, and the reputational damage will be almost impossible to overcome, even if it does. If that was not enough, the collateral damage was extensive. Luna saw its market capitalization drop from $30 billion to $10 billion in the past 5 days, and its price is down 64% over this time frame. Additionally, because the team flooded the market with Bitcoin to protect the price peg, it added further selling pressure to that asset, seeing it drop below $30,000 for the first time since last July. Crypto's market cap has lost about $300 billion in the past few days. Finally, stablecoins are an increasingly important part of the cryptocurrency industry. The trouble is that if any of these large stablecoins fail, whether USDT or UST, it could damage the entire crypto ecosystem. As a result, Luna's 50% price drop is cause for concern for all crypto investors, not just those who hold UST or Luna. If there is one saving grace here, it could be that the other significant stablecoins, such as USDT and USDC, have largely managed to avoid damage themselves. However, as they continue to grow in size, it is fair to assume that regulatory scrutiny will only grow in light of these events. It is also fair to wonder if or when there will ever be a successful algorithmic stablecoin. UST surged in no small part due to backlash among crypto natives to the centralized way USDT and USDC operate, which they see as anathema to crypto's ideals. Of course, decentralization is a spectrum, so perhaps there is a middle ground between purely algorithmic tokens and the decentralized model. Regardless, no tokens will succeed until they can prove their viability during times of stress, something that the traditional financial sector also struggles with today. Well, guys, that's all we have for you today. What are your thoughts on this? Let us know in the comments. If you like this video, then be sure to give this video a big thumbs up. Also, if you don't want to miss out on any new future videos, then be sure to click on the subscribe button and turn on the notification under this video so that you're notified the next time we upload a video on the latest cryptocurrency news. Thanks for watching. We hope you have a great day today, and as always, we'll see you in the next video.